Hi friends, myself Subrata Mukherjee and you are viewing my channel Dr. Subrata Mukherjee Distance Learning in Commerce. I would like to request my viewers to subscribe the channel and to see the playlist section of the channel to see the lectures that I have uploaded on accounts, costing, financial management and management accounting. Please give your valuable comments so that students who cannot afford private tuition can have access to quality education. Students can communicate with me through email that I have given in the description box. Today, I will discuss how to finalize the accounts of manufacturing concern. The following is the trial balance of Mr. Roy as on 31st March 2019. On debit balance, we have plant and machinery 3,10,000, opening stock 30,000, sundry debtors 40,000, wages 10,000, salaries 15,000, rent paid from April 2018 to June 2019 18,000, purchases 1,50,000, return inward 10,000, bad debt 9,000, insurance 3,000, office expenses 5,000, cash in hand 30,000, cash at bank 45,000. And on credit side, we have capital 4,20,000, sundry creditors 20,000, sales 2,10,000, return outward 20,000, provision for doubtful debt 1,000, interest 4,000, and total of debit and credit side is 6,75,000. Additional information: stock on 31st March 2019 was valued at rupees 35,000. Further bad debt of rupees 1,000 is to be written off and a provision for doubtful debts at 5% on sundry debtors is to be maintained. Goods costing rupees 5,000 have been distributed as free sample. Purchases of machinery worth rupees 20,000 on 1st October 2018 has been wrongly included in purchases account. Depreciation at 10% per annum is to be charged on machinery. Office expenses outstanding rupees 500. Prepare trading profit and loss account for the year ended on 31st March 2019 and balance sheet of Mr. Roy as on that date. I would like to request my students to note the problem first in your notebook and then follow the way I am doing the solution. So since this is a problem on final accounts of manufacturing concern, so let me first discuss about the additional information, the adjustments which are given in the problem. So the first adjustment, so closing stock of rupees 35,000 will be posted on the credit side of trading account and in the asset side of the balance sheet. Next adjustment is given that a further bad debt of rupees 1,000 is to be written off and a provision for doubtful debt at 5% on sundry debtor is to be maintained. The trial balance which is given to you, you have a bad debt of rupees 9,000. So the additional information which is given that there is a further bad debt of 1,000, it means this bad debt has been recognized after preparing the trial balance. So the journal entry that you need to pass is bad debt account debit, bad debt account debit to sundry debtors. Account 1,000. So bad debt is a nominal account. So this amount will be transferred to profit and loss account. So in profit and loss account, we are going to put this bad debt of 1,000. So in addition to the 9,000 which is already given in the trial balance, and 1,000 we are going to deduct from the balance of sundry debtors. So in the balance sheet it is given debtor balance is given in the balance sheet at rupees 40,000. So we are going to reduce this 1,000 for the bad debt and the closing balance of debtor will be 39,000. Now you need to create a provision for doubtful debt. So provision required, provision for doubtful debt provision for doubtful debt required is 5% of rupees 39,000. So this is 1950. So let me draft the provision for doubtful debt account. So here I am writing provision for doubtful debt. So you have by balance BD 1000, which is given in the trial balance. You can see in the trial balance that provision for doubtful debt given at rupees 1000. Now you require a provision, so to balance CD, this required amount is 1950. So the balancing figure of 950 will be transferred from profit and loss account. So this is 950. So your journal entry will be profit and loss account debit to provision for doubtful debt rupees 950. The third adjustment is goods costing rupees 5000 have been distributed as free sample. Your adjustment entry is advertisement account debit to purchase account 5000. So we are going to reduce 5000 from purchase, and this amount of 5000 will be shown in the profit and loss account as advertisement expense. The fourth adjustment entry is regarding purchase of machinery worth rupees 20,000 on 1st October 2018 has been wrongly included in purchases account, and depreciation at the rate of 10% to be charged on machinery. So there was an addition of machinery to a tune of rupees 20,000, but it was wrongly debited to purchase account. So you need to make a rectification entry. So your rectification entry is machinery account debit to purchase account 20,000. So you need to reduce 20,000 from purchase account, and you have to add this 20,000 to machinery. Now what will be the amount of depreciation on machinery? So regarding this fourth adjustment, you have part A. I can say that regarding the rectification of journal entry you have made, and the next is the amount of depreciation on machinery. The balance of machinery in the trial balance is given at 3,10,000. You can see here in the trial balance 3,10,000 is given as the balance. So you need to charge depreciation of 10% on this 3,10,000, and you have made an addition of 20,000 on 1st October. So on this 20,000 you need to charge 10% depreciation, but for only 6 months. From October to March 2019 you have a period of 6 months. So 6 month depreciation will be charged on the addition of machinery. So what is the amount of depreciation? 31,000 plus 1,000. So this will give you 32,000. So total amount of depreciation on machinery that you are going to charge is rupees 32,000. And the fifth adjustment is office expense outstanding rupees 500. Your journal entry will be office expense account debit to outstanding office expense account. Office expense account is a nominal account, and it will be shown in the profit and loss account, and outstanding office expense being a personal account will be carried down to the balance sheet on the liability side of the balance sheet. So this is a nominal account, and you know that all the balances of nominal account will be transferred to profit and loss account, and this is a personal account. So personal account will be shown on the liability side of the balance sheet because this is an outstanding balance. So office expense account debit to office expense payable account or to outstanding office expense account. In the trial balance, it is given that rent has been paid for 15 months, that is from April 2018 to June 2019, and the amount is 18,000. So the sixth adjustment entry will be a journal entry that you are required to pass is prepaid rent account debit, prepaid rent account debit. What will be the balance? So 18,000 has been paid for 15 months. And what is the prepaid expense? This amount is 18,000. into 3 by 15, you will get 3,600 to rent account. So prepaid rent will be shown in the asset side of your balance sheet, because prepaid rent account is also a personal account and rent is a nominal account, and this amount is already given. The amount already given is 18,000. So you are going to reduce this amount of 18,000 by 3,600. So here are the 6 adjustment entry that I have passed, and you are not supposed to pass the journal entry. I have passed the journal entry for your understanding, and I will just directly put the adjustments in the either in the trading and PL account or in the balance sheet. You note the adjustment entry in your notebook so that you can understand the solution thoroughly and properly. So for the understanding of the student, I am again repeating the adjustment entry. So the first adjustment entry is regarding the closing stock. The balance of closing stock will appear on the credit side of trading account and on the asset side of your balance sheet. The next item is regarding the bad debt, the further bad debt of rupees 1,000. So the journal entry that I have passed here is bad debt account debit to Sunny debtors. So what is the effect on your profit and loss account and balance sheet? So we are going to add 1,000 to the bad debt which is given at 9,000. So we are going to add 1,000 more to the bad debt balance which is given in the trial balance, and we are going to reduce the Sunny debtor balance by rupees 1,000 for bad debt. And what is the required amount of provision for doubtful debt? So this is 5% of sundry debtor. So the revalued sundry debtor balance is 39,000 and the provision required is 5%. So 5% of 39,000 is 1,950. So what is the amount that you are supposed to transfer from profit and loss account to provision for a doubtful debt? So that amount is 950. You can see the playlist section of the channel, and I have uploaded 2 problems on bad debt and provision for bad debt. It will help you to understand the provisions account more thoroughly and properly. Next is the advertisement. So here the amount has not been paid, rather it is given in the form of goods. So we are going to reduce the amount of 5,000 from your purchase. That is the quantity of goods has been utilized for advertisement. That is a free sample, you can say. So advertisement expense account debit to purchase account. So we are going to reduce the amount of purchase of rupees 5,000 and we are going to put this 5,000 in your profit and loss account as to advertisement expense. The next is a wrong entry has been passed. Instead of debiting the machinery account, you have debited purchase account. So you need to pass a rectification entry. So machinery account debit to purchase account rupees 20,000. So amount of purchase will be reduced by 20,000 in the trading account and you need to add 20,000 to machinery. So what is the amount of depreciation at the end of the year that you are going to charge in machinery? That is 3,10,000 is the balance given of machinery in the trial balance. So 10% of 3,10,000 is 31,000 plus 20,000 into 10% into 6 by 12 means 1,000. So 32,000 is the amount of depreciation. And this amount will be charged to profit and loss account. Next is outstanding expense, office expense. So office expense rupees 500 debit to outstanding office expense. Office expense already given in your trial balance as rupees 5,000. So we are going to add up 500 to rupees 5,000 in the profit and loss account, and in the liability side of the balance sheet we are going to show this outstanding office expense for rupees 5,000. Office expense is a nominal account, whereas outstanding office expense is a personal account. And prepaid rent 3,600 and prepaid rent account debit 3,600, because in the trial balance it is given that rent has been paid for 15 months and the amount paid for rent is 18,000. So what is the amount paid for 3 months? That is from April to June. So April, May and June 2019. So the amount is 3,600, 18,000 into 3 by 15. So we are going to reduce the amount of 3,600 from this amount of rent that has been paid, and prepaid rent will be charged or will be shown in the asset side of the balance sheet. So If you are asked to prepare the prepaid rent account or simple rent account, I am writing here for your understanding rent account, and you have paid to bank or cash. We have paid 18,000. So I am writing here 18,000. And since 3,000 has been as 3,600 is the prepaid expense, so I am writing by balance CD 3,600, and the remaining amount will be charged to profit and loss account, that is 14,400. So actually this is the rent account that I have prepared for your understanding. Now come to preparing the profit and loss account and the balance sheet. So here is the structure that I have prepared in the books of Mr. Roy, Trading and Profit and Loss Account for the year ended 31st March 2019, and the balance sheet as on 31st March 2019. So the first item which is given in the, so we will start from the first item which is given in the trial balance, that is plant and machinery, and we are not going to skip any of these balances. We are going to put the balances directly either in the PL account or in the balance sheet, and we have already discussed the adjustment entry. So all the effects of the adjustment that I have done, that I have discussed, will directly be posted in the trading profit and loss account or in the balance sheet. Now let us start. So the balance of plant and machinery 3,10,000 that we are going to put in the asset side. Plant and machinery balance is 3,10,000. I am writing in the inner column. Next is opening stock. So opening stock is a part of your trading account. So I am writing to opening stock, rupees 30,000. So I am leaving some space for adjustment entry on plant and machinery, and then I am writing the balance of sundry debtors for rupees 40,000. Next item is wages. So wages is a part of your trading account. So I am writing here in the trading account to wages rupees 10,000. There is no adjustment, so you can safely write in the outer column. Next is salary. Salary is a part of your profit and loss account. So I am writing here in the PL account salaries rupees 15,000. Next item is rent. So I have already discussed the adjustment for rent, so I can safely write amount of 18,000 as given in the trial balance less prepaid 3,600, and in the outer column I am writing 14,400, and in the balance sheet you can safely write prepaid rent 3,600. Next is purchase. So here I am writing to purchase 1,50,000. In the trading account I am writing purchase 1,50,000 in the inner column. Next is return inward. Return inward means sales return. So in trading account I am writing here buy sales. I don't know the figure here. I am not writing the amount of sales, but simply I am writing less return inward. Less return inward. And what is the amount of sales return? This is 10,000, which is given in the trial balance. After return inward, the next item is bad debt. So in PL account I am writing to bad debt. In the inner column I am writing 9,000 rupees. Then you have insurance. So in PL account I am writing to insurance rupees 3,000. Next you have office expense. So I am writing in the PL account to office expense. In the inner column I am writing 5,000 rupees because there is one adjustment entry. Next is cash in hand. So in the balance sheet I am writing cash in hand and cash at bank. So cash in hand is given at rupees 30,000 and cash at bank 45,000. I have posted all the debit balances of the trial balance, either in trading PL account or in balance sheet. Next, coming on the credit side of trial balance, the first item is capital. So capital will appear in the liability side of your balance sheet. So opening capital is, I am writing at rupees 4,20,000. Next item is sundry creditor, so which is also a part of your liability side of the balance sheet. So sundry creditor is 20,000. I am writing it on the outer column. Next is sales. Sales is 2,10,000. I am writing in the trading account. Next is return outward. So you need to reduce the amount of purchase by less return is 20,000. So we are going to reduce 20,000 or return outward from purchase. Next item is provision for doubtful debt for rupees 1,000, which is given in the trial balance. So in PL account I am writing to provision for doubtful debt. This is new amount, new provision is calculated at 1950 and less old is 1,000. So the difference of 950 we are going to charge to PL account. So the actual journal entry is profit and loss account debit to provision for doubtful debt, and provision for doubtful debt account I have already shown you in the workings. So this 950 I have to charge to profit and loss account. Next item is interest. So interest is part of your profit and loss account on the credit side I am writing by interest. And in the outer column I am writing interest 4,000. So I have posted all the debit and the credit balances of trial balance either in trading PL account or in balance sheet. Next, coming to adjustment entry. So the first item is closing stock. So I can safely write here in the trading account by closing stock 35,000, and in the asset side of your balance sheet I am writing closing stock 35,000. Next is further bad debt. So bad debt I have already recorded in PL account at 9,000. So add further bad debt rupees 1,000. So the actual amount of bad debt that will be charged to PL is 10,000. So you need to reduce this amount of bad debt. So less bad debt in your asset side of the balance sheet. I am reducing 1,000 from 40,000. So the balance of bad debtor comes to 39,000, and from here you need to reduce the amount of provision for doubtful debts. So provision for doubtful debt is 1950. So actual amount of debtor is 37,050. You can write provision for doubtful debt on the liability side as rupees 1,950 and sundry debtor balance on the asset side at rupees 39,000. The next item is the advertisement expense. So I am reducing the amount of advertisement, that is the free sample you can say, from purchase of 5,000 I am reducing from purchase, and in the PL account I am writing to advertisement. $5,000. Next item is regarding purchase of machinery. So I am reducing machinery purchase 20,000 from purchase which was recorded wrongly. So from purchase 1,50,000 I am reducing this amount of 20,000 for machinery 20,000, and I am adding this amount of machinery in the asset side of the balance sheet as further addition. There was a further addition of 20,000. So total written down cost value of your plant and machinery is 3,30,000 less depreciation 32,000. I have shown how to calculate the amount of depreciation on plant and machinery. So the written down value of plant and machinery is 2,98,000. So the amount of depreciation that I am recording in the asset side of your balance sheet of 32,000, I need to record it in the profit and loss account. So in profit and loss account, I am writing to depreciation on plant and machinery 32,000. The last item is regarding office expense, outstanding office expense. So in PL account, you need to add outstanding expense 500, and I am adding it with the office expense of rupees 5,000, which is given in the trial balance. So actual office expense is rupees 5,500, and this outstanding balance of 500, I am going to show it in the liability side of the balance sheet as outstanding office expense. Rupees 500. So this way I have recorded all the adjustment entry given in the question. Now it's the time to close the accounts. So I have recorded this 35,000 of the closing stock in the inner column. Okay, I need to write it in the outer column. So closing stock 35,000. Your sales, actual sales is rupees 2 lakh, and your purchase amount 1,50,000, and I have reduced this 45,000. So your purchase is 1,05,000. So 2,35,000 is the total of credit side of your trading account. So I am writing here 2,35,000, and your gross profit to GPCD is 90,000. So by gross profit PD, I am writing in the PL account as 90,000. So total of the credit side of profit and loss account is 94,000, and the amount of net profit is 8,150. So what are the items of your PL account? To salaries 15,000, rent 14,400, for the bad debt 10,000, insurance 3,000, office expense 5,500, provision for doubtful debt 950, advertisement 5,000, depreciation on plant and machinery 32,000, and net profit 8,150. Net profit will be added with your capital 8,150. So your closing capital will be 4,28,150, and the balance sheet total will be 4,48,650. 4,48,650. So the items of liability side is capital 4,28,150, syndicators 20,000, office expense 500, and on the asset side we have plant and machinery 2,98,000, Sunday debtors 37,050, prepaid rent 3,600, cash in hand 30,000, cash at bank 45,000, and closing stock 35,000. Thanks for watching the lecture.